Real estate investors, if you are not using this tax deferred strategy, you are putting huge amount of money on the table. Watch as our guest today shares her expertise and insights on this powerful tax deferral strategy called 1031 exchange that can benefit individuals and businesses. So let's welcome Margo McDonnell, a certified exchange specialist with over 2 decades of experience in 1031 exchange industry. Welcome, Margo.
Good morning. Thank you for having me, Bipin. I appreciate it.
Sure. Margo, 1031 exchange is something that I love to talk about, and I know you've been talking about it much longer for over 2 decades and helping your clients save money. Why don't you tell our audience who is Margo?
Sure, I'm happy to do that. So as you said, I'm Margo McDonnell. I am the president of 1031 Corp. And I have been doing 1031 exchanges now. Next month will be 29 years.
Wow.
And I find that hard to believe sometimes myself, but I love the opportunity to educate people on 1031 exchanges. While I answer their questions, I'm really focused on helping them use 1031 to preserve their equity and build wealth. It's a great tax strategy, and I have enjoyed learning more about it and then sharing that information with others.
And what is 1031 Corp?
1031 Corp, we are a qualified intermediary, and that means we're the independent party necessary to facilitate a 1031 exchange. So we handle all of the necessary documentation. We coordinate all the closing details with your closing agent, so we're another party to the transaction. We do control your sale proceeds while you're waiting to buy your replacement property. And essentially, we're there to guide you through the whole process and make it easy for you to do a 1031 exchange. You can count on us to know the rules.
And do it right.
And do it right, yes.
Because it is so critical. Normal transaction, when you're buying or selling, things can go wrong. And sometimes the closing gets dragged beyond anybody's control. Now, in this particular strategy, you cannot afford to be delayed. Otherwise, the purpose doesn't get served. The 1031 exchange has strict deadlines.
Yes.
So why don't you tell people a little bit more about 1031 exchange program? How does it work?
Sure.
And who can take advantage of that?
Sure. Well, let's start with what exactly it is. So it's Section 1031 of the Internal Revenue Code that allows you to defer the gain when selling any type of business use or investment property and reinvesting in another one. But it does have to be completed within a certain time period, as you mentioned. So from the day you sell your old property to a buyer, you have 45 days to identify a new property, and running at the same time, you have 180 days to actually buy whatever it is you want to buy to complete your transaction. The 1031 exchange will allow you to defer your federal gain, your state gain, and also your depreciation recapture. And the gain is deferred as long as you own that new property. So if you own it for 5 years and it's still an investment property, you can exchange again. You can sell more than one, you can buy more than one, and you can buy anywhere in the US. So there's a lot of flexibility in what you can do. But as long as you don't sell that property without doing a 1031 exchange, that gain is deferred indefinitely. Now, somewhere down the road, if you decide that you want to sell, then you could sell without doing a 1031. You could sell and pay the tax. Or if you continue to hold investment properties for the rest of your life, and let's face it, we're diehard real estate investors. We're on this show because we think it's the best investment out there. So if someone holds these properties indefinitely, and unfortunately everyone passes away at some point, but when that happens, your heirs inherit all of your assets with a step up in basis. So if it was acquired through a 1031 exchange, all of the gain that you deferred through 1031 is all forgiven at the time of death. And depending on the size of your estate, you may not have any federal estate taxes to pay either. So it's a great way for you to build wealth using pre-tax dollars and then pass that wealth to the next generation.
So this is not only just a tax deferral strategy. In some cases, you can eliminate your tax liability.
Yes. Of course, you do have to pass away to do that, but it's a great way to preserve your wealth and, like I said, pass it to your heirs.
Right, right. Now, what are the requirements for a property to be considered a like kind? Because 1031 exchange is a like kind exchange.
That is right. And that term causes the most confusion with 1031 exchanges because like kind has nothing to do with the type of property you're selling. It has everything to do with the use of the property. So any type of property that's been held for business use or investment will qualify. While a single family rental accounts for probably 60 to 70% of all the exchanges done around, across the US. It could be a farm, it could be a shopping center, it could be a conservation easement, it could be mineral rights or water rights. So there are a lot of things that you don't automatically think about when we start talking about 1031 exchanges.
Right. Now, what properties do not qualify for this?
That's a great question. Because the first two I mentioned are the ones I get a lot of calls about. The first is the house you live in, your primary residence. And especially in the last few years when we've all enjoyed a lot of appreciation on our primary residences. But a primary residence doesn't work under 1031 because it's a personal use property. But with your primary residence, if you lived in the property for 2 of the last 5 years, you can exclude up to $250,000 if you're single, $500,000 if you're married filing jointly. So they can talk to their tax advisor about that. A true vacation home that you never rent out doesn't work either. What else doesn't work is any personal property included in the sale. So for example, if you sold a hotel, and I'm making up numbers here, but let's say you sold the hotel for $5 million and $1 million was allocated to all the furniture, fixtures, equipment in that hotel, your exchange would only be for the $4 million. Any cash you put in your pocket and don't put into the next property, you'll have to pay taxes on. Any financing that you give to your buyer, again, will not qualify. And the last thing that I wanted to mention is anything held for sale. So if you're flipping homes, or if you are a developer and you have spec homes or you have building lots, that's treated as inventory and it doesn't qualify for 1031.
And you have to hold the property that is making money for you for a period of 1 year. Is that true?
1 to 2 years is a good rule of thumb. Yeah. It's not written in stone. Right. I always tell people to talk to their tax advisor, but think about how it's been reported on their tax return. What was your intent? Was it really available for sale, or were you hanging out at the shore house?
Right. I mean, people have vacation homes that are rented, and I know there are tax laws that allow you to use that for a certain amount of days per year.
Yes, that is true. You could use it right.
And if you meet those tax guidelines, then that may qualify for a 1031 exchange.
Yes. So if it's a vacation home or let's say a resort area rental, and you are not using it more than the greater of 14 days or the 10% the number of days rented, then you can absolutely do a 1031 exchange.
Right. Now, you have to again work with a experienced CPA or a real estate tax attorney or a tax advisor on all the things that we are talking about. However, are you familiar with any of the other tax strategies that can be combined with 1031 exchange to get even a bigger benefit for the real estate investors when trying to sell and buy?
Well, 1031 is really unique in that it allows you to defer the gain indefinitely. So there are qualified opportunity zones that came out of the Tax Cuts and Jobs Act, but that's not indefinite. So you're only deferring for a certain period of time, and there are definitely tax advantages there. But I always caution business owners, when you're thinking about 1031, find out what tax incentives are available through your county, through the cities, through the local municipalities, because you may be able to benefit from those as well as the tax deferral included with 1031.
Right. Are there any recent changes or updates to the 1031 exchange rules that investors should know about?
So there are two. One is a couple years old, but someone who had heard about 1031 exchange may not know this. So I'll just throw this out there, and then I'll throw out the really exciting new stuff. But the first thing is, I just want to mention that with the Tax Cuts and Jobs Act that went into effect in 2018, you can no longer exchange personal property held for business use or investment. So, for example, if you did have that hotel before 2018, you could exchange the real estate and you could exchange the personal property and exchange all that furniture, fixtures, and equipment for new furniture, fixtures, and equipment, or airplanes for airplanes. So you can't do that anymore, but you could still do it on real estate. And there's a lot of tax incentives with bonus depreciation that will help you on that personal property. But the really exciting change is Pennsylvania finally recognizes 1031 exchanges. So I mentioned earlier, you could defer your federal gain, you could defer your state gain. But up until January 1st of this year, we were the only state with an income tax regime that did not follow the federal code or have their own version of 1031. So if you started a 1031 exchange before January 1 of this year, you did have to pay. You may still have to pay for your 2022 exchange, but you would have to pay your Pennsylvania state income tax on your profit. But now we have a level playing field in Pennsylvania, and we can defer the state gain as well. So that's super exciting. After 102 years, we're finally like all the other states.
Yeah, absolutely. Yeah, I've been waiting for this Pennsylvania tax benefit for a long time. And as you said, it was 1921 that IRS Section 1031 was put into practice.
Yes. And, it was put in the tax code all those years ago to encourage people to reinvest. So if you had a barn and I had a barn, they wanted us to swap those barns. And the idea was, if we don't put any money in our pocket, why should we have to pay the taxes?
Right.
And it stayed in the tax code for all of these years through all these rounds of tax reform because it does what it was intended to do. It encourages reinvestment, which creates jobs, which helps the economy, and it works. It works really well.
You want your money to make money for you, and this is one of the greatest tools, I think.
That's exactly right. When I first got into this industry and went to my first 1031 conference, 28 years ago, I remember someone described a 1031 exchange as an interest-free loan from the IRS. You could increase the principal because you could do more exchanges. And if you plan properly, you'll never have to repay it. It's a really powerful wealth building tool.
And real estate investing, whether or not you are taking advantage of 1031 exchange, is still a win-win game. Warren Buffett says you should have multiple sources of income. You may be doing anything, but by having a real estate investment property, the benefits are endless.
Exactly. Exactly. And I did want to just mention just a couple of quick rules that I didn't talk about earlier. But in order to defer all the gain or maximize your tax deferral, you do want to buy something for equal or greater value and equal or greater equity. So you really want what you had in the first property or more in the next one. And the other thing is just think about how it's reported on your tax return. Who is the owner of the property or the taxpayer reporting it on their tax return? That owner, that taxpayer should also buy the replacement property.
So if you're a business, if the property is in the name of the business, then you want to keep the same entity.
Yes, exactly. Exactly. Because it's reported on one form on your taxes. So just think about the taxpayer identification number that's been reporting all the income and expenses and taking the depreciation for however many years you owned it. So in order to put it on that return, the same entity or same taxpayer has to buy it.
Right. Now, I was reading your bio on your website, and it talks about you have experience in delayed, reverse, and improvement exchanges. Why don't we delve into that?
So we're talking about delayed exchanges. A delayed exchange is when you sell your property and then you buy that replacement property within the next 180 days, which is the way the majority of all 1031 exchanges are done. But let's say, for example, you sold your property for $500,000 and you have you found a property that's only $400,000 and you want to take that last $100,000 and make improvements. Well, the rules say once you buy the property, that's it. You can't put more money into it afterwards and defer the gain through 1031. So what could happen is the qualified intermediary, 1031 Corp, could step in there. We could take legal title directly from the seller. We can make the improvements and then transfer the property to you within the 180 days. It's a little more complicated, but it does really help you accomplish the goal of deferring all the gain. It gets a little tricky in Pennsylvania because, well, we level the playing field with the capital gains and the deferral of gain. We do have double transfer taxes on that extra transaction. So it's important that we work with your tax advisor and just make sure you're getting the intended benefits. And a reverse exchange is backwards. And, just think about the real estate market now. You're so worried that you can't find the right property to move into. So people are looking for those properties before putting their old property on the market. So to make sure they get that property, they're entering into an agreement of sale. And sometimes that old property doesn't sell in time. So in that situation, 1031 Corp, again, we form a brand new entity. We take title to the new property and we hold it up to 180 days, giving you time to sell your old property.
Right. And, there comes a time when a property is on the market and you want to grab it. So that is how you can take advantage of this
Exactly.
benefit. Yeah. Now, about that double taxation, I have experienced that when I'm buying a personal property, sometimes through an intermediary who has who has taken a title, and that is pretty unfair. That are there any moves to get that double taxation reward?
When we're doing the reverse exchange or the improvement exchange, we get a little creative and we form two separate LLCs to try to avoid some of the double transfer taxes. It doesn't always work because not everybody wants to own property in an LLC. So we had to think about that. But unfortunately, in the Commonwealth of Pennsylvania, that is the challenge. We don't have the same challenges everywhere else.
Right. Absolutely. Yeah. When I bought my first property, I didn't know. I bought it in a personal name.
Oh, yes.
And then a few years down the road, I was told I mean, my second property was in my LLC, so I had to uh, pay the tax twice in Philadelphia.
Right. Oh, so painful. If you were doing a 1031 exchange and you own the old property as Bippin, right?
Yeah.
Individual taxpayer, and you want to form that LLC to take title to the new one, you can form a single member LLC where you're the sole member and you elect to be treated as a disregarded entity for tax purposes and have that set up so that you take title in that new LLC. And that's the way to avoid the transfer taxes on something like that. And we see a lot of people do that.
Yeah, something I didn't know at that time.
Yes, form the LLC and buy it in the name of the LLC.
Okay. So you can exchange it and avoid taxes. Yeah, because I am working with certain clients who are in that situation. So I'm glad you mentioned that. Thank you.
Absolutely. And anytime you have questions, reach out. I'm happy to help.
Yeah, I sure will. Now, so you are a certified exchange specialist, and also you're on the council of Federation of Exchange Accommodators. Why don't you talk about that? What does that do?
Sure. So, unlike the real estate industry that you're in, the 1031 industry is largely unregulated. And back in the early 2000s, we wanted to give real estate investors and their professionals a way to choose a qualified intermediary. So, through the Federation of Exchange Accommodators, which is our national trade association, I spearheaded an effort to launch the Certified Exchange Specialist Program. So, it is a designation for those who meet the eligibility requirements, pass an independent third-party examination, and then meet an education requirement of 20 hours every 2 years. So in order to be eligible to sit for the exam, you had to have at least 3 years of full-time experience facilitating 1031 exchanges. It's not intended for the salesperson out there. It's for the people who are actually, doing the 1031s. They know not just the 1031 rules, but how to apply them. And they have to pass the examination and abide by a code of ethics. So I know with our company, once you meet the 3-year eligibility requirement, we're sending you to take that test. So that has been actually one of the things that I'm most proud of in my career because of my involvement in that program.
Right. You're the founding chair of that program.
I am. Yes.
And you also serve the community, and you've been involved in the industry. I know you are an affiliate director of the Tri-County Suburban Realtors Association, of which I am a member.
Yes.
And I know that it is a passion to educate the realtor community and investors at large.
Yes, I enjoy that, and I like the opportunity to work with the people that I do business with every day, and it helps me get a feel for how we can make our transactions better for our clients, and it helps us know more about the real estate industry as a whole, so that we can be better partners to our clients when they come to us. We have a better feel for what's going on in the market, and of course, I do like to give back, and I'm appreciative of the opportunity to serve on the board and their commercial chapter advisory council. And I love teaching classes there.
Right. Yeah. So let us summarize how the program works.
Sure. So what I would say is, how about if I walk you through an exchange?
Yeah.
Okay. So if someone is thinking about selling a property, whether you're contemplating a 1031 exchange or not, you should always talk to your tax advisor, know what the tax consequences are ahead of time. And if you're thinking you want to do a 1031 exchange, reach out to a qualified intermediary, whether it's 1031 Corp and our great team or somebody else, but learn about exchanges and determine if this might be a good opportunity for you. But the first step I would say is you're going to list your property for sale, and then you're going to enter into an agreement of sale. And that's the time when you should reach out and retain the services of a qualified intermediary. The qualified intermediary, we're an independent party. We are not the real estate professional, the attorney, the tax advisor, close relative, an employee, or a partner. We're truly an independent party that will only facilitate the 1031 exchange. But we have to be in place before you transfer title of your property to the buyer. So once you enter into that agreement of sale, that's a good time to retain the qualified intermediary, who will then work with the closing agent and your real estate professional to get the agreement of sale, the title report. We'll make sure that we're setting everything up correctly. We'll prepare all the documentations. We'll send it to you for signature, and we could do everything through DocuSign. We could do virtual meetings. We could do telephone calls, whatever makes it easiest for you. Once we have all the documentation, we'll send instructions to the closing agent. Once closing takes place, we will direct the closing agent to wire your exchange funds into an account that we set up with your name and social security number attached to that. You will be allowed to log on to the bank website, see your account balance. You'll see the interest earning. If you need an earnest money deposit, we can take it out of that account, of course, with your written authorization. And then you go to work looking for your new property. And you could start looking for your new property before you put your old one on the market. But we'll tell you what your time deadlines are. We'll give you a form letter to make identifying really easy. And you have until midnight of the 45th day to actually identify. And then you'll enter your property under an agreement of sale. We'll work with you to make sure the earnest money deposit is taken out of that account. And then we'll get a copy of that agreement of sale, and everything from the title agent. We'll put together instructions for the closing agent or attorney handling the purchase of your new property. We'll look for your written authorization to release the funds. We'll wire the funds to closing. You'll go to closing, you'll sign off on everything, and you're done. It's really just the sale of your old property, followed by the purchase of a new property, linked together by that paperwork that the qualified intermediary is going to take care of, and complete it within that time frame. It's a simple process.
And then, so you hold that money with you for the client.
Yes.
And depending on whether the new property is higher priced or lower priced, that would determine how much of a tax benefit they would get.
Exactly. So as we mentioned earlier, and let's use an example. So if you sell a property for $100,000 and you have $10,000 of closing cost, just using nice, easy round numbers, you're left with $90,000. All of that $90,000 should be hang on, let me take a step back. Your net selling price is $90,000. The new property, including closing costs, should equal at least $90,000.
Right.
If from that $90,000, the balance of your mortgage was paid off, and that was $50,000, you're left with $40,000 of cash or equity. All of that equity needs to go into the new property. If you buy something that costs less than $90,000, including closing cost, or if it has less than $40,000 of equity in it, you pay tax on whatever the trade down is. And we call that trade down boot, just like you would wear on your foot. It's a crazy term for it, but that is the boot. But it's important that you talk to your tax advisor, because sometimes you have passive losses that could offset gain. And while 1031 is a great tax strategy, it's not always the right one in every situation. And if you're trading down, sometimes there's still great benefit to doing it, but sometimes there's not.
Right.
And that's why it's so important to talk to your tax advisor.
Right. So we are all a team, a realtor,
Yes.
a tax advisor, CPA, tax attorney, and you. So we
Yes.
are all a team that is there to help our client achieve their goal by
Exactly.
by keeping their strategy and whatever is the right thing for them to do. And
Absolutely.
as you said, in some cases it makes sense for them to do a 1031 exchange, and in others it does not. So,
Right.
however, there are there are three ways that you mentioned. A regular 1031 exchange, a reverse 1031
Mhm.
exchange, and improvement.
Right.
And uh, the time frame again, as you had mentioned, you have to identify the property in 45 days and complete that transaction in 180 days. So those dates are written in stone.
Yes, they are calendar days. They're running at the same time. So if today is your 45th day, you're going to hear from somebody else, someone from my team by 9 o'clock tonight. If we don't hear from you, we're going to try really hard to make sure that you get that. We're going to look for that identification. We're going to check it. If there's any concerns, we will reach out to you. Our goal is to help make this successful for you.
Absolutely, absolutely. Now, how can the client be confident that if they're doing a big property, how can they be confident that their money that is being held by a 1031 exchange specialist is safe? I know you're a big corporation, you don't have to worry
Mhm.
about it, but if people are dealing with
Mhm.
another or
Mhm.
with any 1031 exchange intermediary company, what are some of the things that they should look out for so that make sure that the transaction will happen and their money will be safely harbored with while the transaction is taking place?
That is a great question, and the most important question we answer for everybody, because it's not easy to hand your money over to somebody else. And so there's a couple of things we do. One is we want to be just totally transparent. We want you to be able to log on to the bank's website, see your account's balance at any time. You will get statements from the bank as well. We will send you all of those instructions on how to log on to the bank website as soon as your funds are deposited. Anytime we receive a deposit, we will send you confirmation of that. But we can also, or let me take a step back. We set up those accounts so they're titled 1031 Corp for the benefit of BIPIN with BIPIN Social Security number attached to that. So the way the accounts are set up, they, at least for 1031 Corp, I can't speak for everybody, but it's set up showing that we are holding those funds in trust for somebody else, and
Right,
that we are not the official owner of those.
right,
While we
right.
can control them, we are not the official owner of those funds. Now, you want to make sure that the qualified intermediary is opening separate bank accounts for every single exchange that they're doing. So if you're doing 3 exchanges with our company, you should have 3 separate accounts. But in most states, there's nothing that says I can't take everybody's money and put it together. So you always want to make sure that you have a segregated account. The other thing is that at no additional charge, we can offer what's called a qualified escrow account. So a qualified escrow account includes a 3-party agreement between the qualified intermediary, the bank, and the exchanger. And it requires the exchanger and the qualified intermediary to sign off anytime there's a withdrawal, and the bank actually controls the funds and processes that withdrawal and will wire the funds to a purchase or send a check for an earnest money deposit. So that's another layer of protection. I know for 1031 Corp, we require your written authorization whenever you send that request to us. Or right, so we'll send you, it could be DocuSign. If it's DocuSign, we use a product called Knowledge Base. It does provide just a soft hit on your credit report, like they just to verify that you are really bipping.
Mhm.
So it's going to pull some information. You're going to see that soft touch. You know, sometimes with we all have these different things set up on alerts on our accounts, but it doesn't pull your whole credit report. It's just leaves a little calling card, say, hey, we were here. But it verifies that it's really you.
Right.
But because we live in a world where there's so much wire fraud and things like that, if you send that to me, even with DocuSign, now I'm going to pick up the phone and I'm going to call you on a previously known number. And I'm going to verify that you really did send that to me. This is the amount, and this is really where you want me to send the money. And then we pick up the phone and we call the recipient of that wire and we verify with them. They can't call us. We have to call them at a previously known number. So we're doing everything we can. I know that, it takes a lot of extra time. Everyone says, why can't you get that out sooner? It's because we're doing all the homework to make sure that it's safe to wire those monies.
And real estate industry, because it handles trillions of dollars in properties, we are a target of the fraudsters.
We are.
And real estate and the wire fraud is real. And we really have to be very, very careful. I know I have heard many horror stories where people have lost all their money that they had saved for their next home, and somebody called and said, hey, or sent them an email saying, hey, there's a change in this, and I want you to wire money to different account. And we always tell our clients that do not do anything without checking, and sometimes they fall for it, which is very, very unfortunate.
It is. And we have caught fraud with all those protocols that I mentioned. We have gotten closing instructions from an attorney's office, from a title company, or at least it appears as though it's from them, and it's not real. So yes, I do have a contact here in my computer for the Secret Service, because, we reach out like, okay, here's another one. And that way, they take that bank account information and try to go to the bank and figure out who is behind that account.
Right. Yeah. We have to be extreme cautious, and, all those steps that you mentioned can be reassuring to our clients that we are not only experts in this industry, but we also are taking all the necessary precautions to be overcautiously protect their biggest assets.
Yes. We are a company that facilitates 1031 exchanges, and that's what we promote ourselves. But internally, I tell our team, well, our job is to facilitate their exchange. There is no more important part than protecting their money. Right? I mean, that's the most important thing.
Right. Margo, I really appreciate you joining me this morning on this beautiful Saturday morning to inform and educate our real estate investors about this amazing tax deferral strategy. So before we end this show, can you, 45 to 60 seconds, summarize this 1031 exchange program?
Sure. So 1031 is a way to help you defer gain, state gain, federal gain, and also your depreciation recapture when selling any type of business use or investment property, provided you buy another property to be held for business use or investment property.
Hey, Margo, we have a comment on our a guest. So let me put it on, and then you can get back to her directly with the information. Hey, Lorraine, thank you very much for joining the show. I see that you have a question, and Margo is going to get back to you on this. Margo, I'll get you the contact information for Lorraine, and you can.
Okay, perfect.
Yeah. So why don't you comment and give her your information so she can reach out to you, and I'll get you Lorraine's information so
Perfect.
You can get back to her.
Yes.
Let me just say. Great. So, Lorraine, do you have any other questions? Okay. So we will definitely get back to Lorraine. And Margo, thank you again for joining this. Uh, we have this small biz spotlight show to inform and educate our community of all different services and products available in our community where we live and work. So every Saturday at 10 o'clock, we bring in a new guest to talk about different things. And so thank you for joining today, and we will see you next Saturday at 10 o'clock with another episode. And I look forward to seeing you. Thank you.
Thanks, Bipin.